Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. When we look through the main markets in the past trading session, Nvidia was down sharply, as was Tesla. Amazon came down, Microsoft and Apple also came down. Bitcoin and crypto is a terrific risk-on or risk-off indicator across financial markets, and we can see whatever happened in the markets, and I'm going to go through that in just a few minutes, impacted the crypto market first, as it typically does. Are we looking for more downside volatility, or is this simply a buy the dip opportunity? Let's find out and let's run the numbers. The first thing we need to do is just to understand how are the main markets going all around the world, not just in the US, but globally. We can see Taiwan's market doing really quite well, Japan's market doing incredibly well, the UK market and the Australian market are looking good. Are we seeing systemic weakness inside other major indices at the current time? Germany is also looking good. No, we're not. There's a slight degree of weakness inside the US stock market indices. Typically, what we see in capitulation events is the other countries outside the US tend to come down first and the US comes down last. We're not seeing that at this time. As I mentioned a couple of videos ago, we had to watch out for this week. It's going to be a very turbulent week, and now you're experiencing what kind of turbulence I meant. It's been pretty harsh, especially inside the crypto market, but we're not seeing any signs of capitulation either to the negative side or to the positive side just yet. Now, what does this mean? It means that this bull run, all things being equal, has a lot more space to run. I saw an article in the last 24 hours where the author said the main markets and Bitcoin have decorrelated. This blue line is Bitcoin, and this is the S&P 500 futures, this is the Nasdaq futures, the Russell futures, and the Dow futures. This is because a lot of people don't understand that directional correlation ties Bitcoin to the stock market, and you can see it very clearly here inside the Nasdaq futures. We're getting negative momentum across the major market futures, and that is translating into weakness for Bitcoin. We have to be aware of these intercorrelations and interdependencies. If you're new, a very warm welcome and welcome back CTKS family. I was mentioning in the last video that yes, we've seen a bit of bullish price momentum, but that doesn't mean we can't come down as we continue to go up, like we've done in past cycles. You can see in the 2016 cycle we came down. In the 2020 cycle we came down to around this point. And then we went up. Of course, we're not following the 2020 cycle, but we are from a directional stance. One thing to note is these up and down price movements. It means that we can be there one day and down there the next, but up there the next day. Please just be aware of this. It is a turbulent period in the markets. Unfortunately, a lot of people just simply don't understand what Bitcoin is. Bitcoin is the world's most risk-sensitive asset class, and it is a new monetary system. You can see Bitcoin here trading against the stock market. And what is Bitcoin doing during this period? Well, the stock market is asleep, but Bitcoin is up and down, and then started to weaken, showing the main market could be subjected to a sell-off. And this is unfortunately what happened. A lot of commentators are pointing to the CPI as the reason for this retracement in the major market indices. But if you look at it, we came out exactly as forecast. So the actual versus the forecast came out the same for the core CPI flash estimate year on year and the CPI flash estimate year on year. So what is the difference? Nothing. And what did we see here? The ISM Services PMI was actually stronger than anticipated. This is all about economic growth. And the JOLTS job openings was larger than anticipated. This means that more people are hiring. These two things are very good. These two things are also good. Yet the market sold down. A number of people have been saying, oh, it's the Fed. The Fed is not going to lower interest rates, and this is such a shock to them. Well, they're not obviously following our community, because if they were, they would know this is not even on the cards. We're looking at up to 2 rate cuts in the next basically 12 months. And we can see in the past 24 hours, the probability of a 25 basis point decrease actually dropped from 8.6% to 6.4%. As I go through this each and every day, it's really important to understand what this means to the economic system. If the rates are not cut, that means economic growth is actually present inside the economic system. This is a good thing. The major reason for cutting rates is a slow economy and to just kickstart up spending by getting people to borrow. But if the economy is strong, well, they don't have to do that. If you're liking the content so far, please massage gently that like button. As the foundation for a new monetary system, Bitcoin is very misunderstood by some very clever and otherwise intelligent people. And if you're not quite getting Bitcoin at this point of time, don't worry, it will become clearer over time. But one thing that we always look at with Bitcoin and crypto, we know Bitcoin is a very risk-sensitive asset class. We need to understand where the structural levels are inside Bitcoin to understand what is occurring inside its structure. We can see there was a level of overhead structural resistance that Bitcoin simply couldn't get through. Because we had a negative CTKS light structural support, we were likely to overshoot that particular structural support level and go down lower. This is the problem with negative CTKS gaps. They can cause overshoots. I'll just put some labels on for you. So in the past 24 hours, Bitcoin sought to get above that 102,691. It couldn't get there. It was subjected to negative price momentum and a weakening market that was felt across the futures as well, inside the major indices. It passed through the 99,798, it overshot it, and had negative structural attraction to the 98,384 level. If it couldn't hold that, and being such a big gap, it was unlikely to hold it. It was likely to move down to the 96,844 or the 96,480 level. And that is where we've currently found support right now. Knowing where the safety nets are inside the market is absolutely critical. So many people were FOMOing in yesterday and saying, oh no, I've missed out. And they probably would have bought around that 102 area, only to wake up this morning and say, oh my goodness, Bitcoin just dropped significantly. And when Bitcoin drops significantly, the alts bleed. We know that we can't just look at Bitcoin, we need to look at total crypto market cap as well. Total crypto market cap encountered an area in the past 24 hours of structural resistance around that $3.54 trillion mark. And we saw it slowly decay, try to get down, and guess what? It just broke. When it underside retested, it didn't even tap the structural sell levels. So there was a tremendous amount of sell pressure here, as was exhibited inside Bitcoin and of course the major indices throughout the US stock market. And we of course had that overshoot. The Bitcoin levels did not hold and we moved down lower. Fortunately, at around that 3.28 mark, we have structural support which is increasing. Inside the Profiting from CTKS Method structure, I teach you how to read through charts, and you must always look at total crypto market cap and Bitcoin together and refer them back to your money chart. We saw in the past 24 hours a huge spike up in the VIX, and we'll look at that in a minute. We saw that gold also increased. Gold tends to sniff out problems in the economic system, and gold went for it, but it encountered this 2652 structural resistance level, popped above it, did a structural fail, and structurally failed. Now it has negative structural attraction back to the 2635 level. You must be aware of how structure actually operates inside financial markets. A lot of people say that there is no correlation between the major stock market indices such as the S&P 500 and something like Bitcoin. Now, a lot of people out there, they just don't understand Bitcoin and crypto, and that's a heck of a shame because they're missing out on so many opportunities. But hey, success is always optional. Okay, what do we see here? We can see from a directional correlation stance, Bitcoin and the S&P 500 were following quite nicely, and then we had this sell-off. There were some releases of economic data, but you know those releases weren't too much of either way. Of course, the number of job openings did improve, and that just meant that there was more hope for growth inside the US economy. The markets have become addicted to the Fed lowering interest rates so that they can put their hands on some juicy low interest rate loans. But of course, we've been tracking this and that probability has been decreasing for literally about 6 months now. The problem is that retail hears a story, adopts the story, and that story becomes their fact. And then they get a very rude awakening. What we seek to do here is to just run the numbers and understand how things actually work. And what was actually cooking inside the main markets was that the VIX decided to really spike up, and when it spiked up, it raised the yields and it raised the DXY. Now that put a lot of negative pressure on junk bonds and sent the major indices into a tailspin. The futures are currently down, but they're not down all of that much. It also hit the stock market, and MicroStrategy and Nvidia, which are quite risk sensitive, and of course Tesla, all got hit. We can see the crypto market really got hit, and this indicates a flow into stablecoins from cryptos at the moment. That's why we look at market cap USDT dominance. Very important thing to look at. And we can see there have been sell-offs right across the board, nearly double-digit sell-downs. And we can see Pepe did quite badly, down over 10%. Now, what was the cause of this? All of this was due to the VIX. The VIX can get really spiky, and that spike sunk the crypto market, and it didn't do that good and didn't do that well to the stock market as well. Looking through your cheat sheet is absolutely critical, and when we look at row 1, what do we notice? The VIX has spiked up. When the VIX spikes up, what happens to Bitcoin? Well, it comes down. If I invert it, you can see just how closely Bitcoin and the VIX are correlated. What about the US 10-year? If the US 10-year comes up, what does Bitcoin do? It typically goes down. It's very yield sensitive, and it's kind of like gold in that respect. After all, Bitcoin is digital gold, according to BlackRock and Fidelity. And please let me know in the comments, what do you say to people who do not understand Bitcoin and crypto as a market? If you're trying to enlighten them and you haven't given up yet. Also, we can note that the DXY just exploded, and if we invert the chart of Bitcoin, what we're seeing is that explosions in the VIX, explosions in the 10-year, the 2-year, the DXY, they're not good for Bitcoin, and they're not good for the stock market either. For some reason, people tend to segregate crypto over into its own box. It belongs inside the stock market box. So whatever that box is, put the stock market and crypto and commodities and Forex all into the same box. Because they are. But Ken, what about crude oil? What about oil? Is that, it is inverting. Definitely. Okay, all right, you've convinced me. Row 1 is definitely a risk-off row. If you're new to this kind of analysis, here we're looking at row 2. Don't worry, it gets easier to understand with time. When we look into row 2, which is junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper, we can see that direct correlation just playing out between junk bonds and Bitcoin. We can see it playing out between gold and Bitcoin, silver and Bitcoin, the euro and Bitcoin, the Aussie dollar and Bitcoin, copper and Bitcoin. Now, what does this mean? Does it mean something like this? If gold goes up, we expect Bitcoin to go up. Yes, it does. What about silver? If we expect silver to go up, what do we expect Bitcoin will do? correct, to go up. Do we expect it absolutely to the ping? No, it's a directional correlation, and directional correlations and momentum are vitally important to understand. There is pressure inside the markets, and I mentioned on Monday, you would be wise to expect it. It is here. We saw something very interesting inside the crypto market. Bitcoin was leading for quite some period of time, and then the alts got a bit of a surge up and then they tanked as the US indices started to join Bitcoin in coming down. And what we're seeing at the current time is Bitcoin is upper bank. Floki, Dodge, Bonk, Whiff, and Shib and Pepe are lower bank. And this is what we would anticipate. This is what makes the memes so important to look at. They do get hit, and they get hit hard when sentiment leaves the market. On the 20th of this month, President Trump will get inaugurated. When that occurs, I believe XRP, ADA, and Doge will absolutely go nuts. Now, if that happens, what you want to just keep your eye on is the fact that those are all like literally presidential appointments in the crypto space and outside it. There's going to be a lot of awareness, and where the fame is, the money tends to follow. So please bear those three in mind. Just on that question, which one do you think will do better? Do you think ADA will do better? Do you think XRP will do better? Or do you think Doge will do better after the presidential inauguration on the 20th? Very much looking forward to your comments. The one thing to bear in mind, no matter what you read in the financial press, look at the charts first. The charts tell you the truth. The media tells you a story. That means it's awfully important to be able to read a chart. This week is a very volatile week. Don't forget the FOMC meeting minutes come out later this week. So that's going to be something important. And I think a lot of people will get a bit of a shell shock and understand, oh, the Fed's not cutting rates. I thought the Fed was cutting rates. My favorite influencer told me the Fed is cutting rates and the liquidity cycle is about to take off and all this, BS, because it all comes down to the charts. If you want your account to get smashed, just listen to people. If you want to do really, really well, look at the charts. Stack probabilities, look for direction and momentum between structural levels, and you will do really, really well. The major momentum inside the crypto market is still positive. One of the things that we need to be aware of, the markets are very volatile. We saw yesterday that things were looking really good until they weren't. And that's the way it goes inside the crypto market. Unfortunately, this is not a price projection path. This is just simply what the last cycle did. It's an overlay. So we're not necessarily saying that the price will follow this exact path, but at the moment it's giving an idea of directionality. Could we come down lower? Yes, we could. Could we go up higher? Yes, we could. That's why professional traders and investors always have three-dimensional decision making. It is not a cop-out at all. It's about the concept that price is always moving in a wave-based function. For example, price will come down, find a degree of support and bounce. Come down, find a degree of support and bounce. If it doesn't pass through a structural support level and show upwards momentum, it has negative structural attraction, or NSA, to lower structural levels. That's why we must know where the structure is. And for years and years and years, we put the structure on the charts, and it is literally like looking into the future. And of course, price is always moving in a wave. It's coming down, then it's going up, it's coming down, it's going up, it's coming down, it's going up. And this is why when people say up only, they're just disregarding the reality of the markets. It's very, very retail. And retail will get your account obliterated. If you're interested in seeing institutional-based thinking, please make sure to like and subscribe this video so you can stay on top of what is truly happening inside the market. Okay, so where could Bitcoin go if it doesn't manage to hold on to things at the current time? You can see these levels that we've talked about previously. The 98,384 level is a very strong level, and we would need to get across that, confirm it as support to see more bullish momentum. If we start to lose this 96,480 level, and remember, these levels are rightwards looking. They're not backwards looking, they're rightwards looking. The reason I put it here is because that's where it was in the last video. I wanted to show you how the price moved. And if we start to lose the 96,480 level, if we do something like this, it opens up potentially an overshoot across the 94,574 level. You must be prepared for up, down, and neutral scenarios. We are smart money, we are not retail. It's also very important to keep a positive mindset at all times. The markets are really volatile, and opportunities and life reset daily. If we understand that life pullbacks give us strength for the next life rally, we can take on the chin whatever happens. We are dedicated and committed. We either win or learn and never blame. Why don't we blame? That's so easy to do. Well, if we do, we don't learn. And if we don't learn, what happens? The market will whack our account around the head, and we don't want that. We know all results come from the mind. If you say you can do something, you can do it. If you say you can't do something, you're correct as well. A better mind creates better outcomes. So many people have their minds completely closed. Nothing grows in there. You don't want to be one of those people. Why on earth would anybody be like that in an age of exponential invention and innovation? But yet they do exist. And always know that you are worthy. You're worthy of every good thing in life. You don't have to sprint out and get it. Just wait for it and do it legitimately. It will come to you, but it will just take its own time. And you can just start small and scale. And of course, in a market like this, I'm borsogging like crazy. What is that? It's buy on red, sell on green. These kind of markets are beautiful to trade in. They're very volatile, but hey, we love volatility. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.